obviously, we expected the 25 and they delivered a surprise 10, sort of an insurance cut. But it's very, very clear that, there is a plenty of room more to go for further rate cuts. Probably it's also needed at this point in time.
Don't look at the magnitude sacrosanct at 25 bips and multiples thereof. So that, as well as some downside risks to growth. Clearly emphasis is on growth, consumption demand, investment demand. So there's inflation being for the next 12 months to be well under 4%, completely allows RBI the headroom for assisting the growth process. We believe that the 6.9% with downside, a tad of a downside risk. We believe there could be a further downside risk from a 6.9 as we progress into the next couple of quarters. Particularly, we believe that the last quarter growth forecast is, likely not to be met, and therefore we believe that if not a 25 basis point rate cut, we may well look at a 15 to 20 basis point rate cut. Depends on the intensity with which growth slowdown plays out over the next couple of quarters.
So markets were priced in for 25 and dovish and 25 and more. The fact that they're saying that 50 would have been excessive just goes on to show that, in India, the rate cut cycle is not deep. Maybe, as Shubhada said, another 15, 25. Now you have to play with semantics here in terms of the magnitude. So repo rate goes to 5 quarter, or at the best, if growth, as Shubhada pointed out, if the fourth quarter GDP growth estimates most likely is going to get cut down, you might get another 25. So there is not a very large rate cycle going through. And that word excessive is, if they were at 25 and been dovish, maybe the markets would have taken it differently. But I don't see a big spike. There's still, I think bond yields have remained at about 632, 635, that range. As I said before the policy, rate cycle below 6% also tends to be very, very challenging. So not much scope for the repo rate to go down. At best, now it's another 40 basis points, right, to get to 5%.
Pragmatic in recognizing that there is a slowdown, both urban and rural. And he's taken steps, I think, very pragmatic ones with a focus on whether risk weightages or even a 35 basis point cut, which seems unconventional but very pragmatic. He's indicated that he is data dependent and that the growth slowdown is cyclical in nature, which we agree with. So I think we have a very responsive RBI, which is with eye on its ball.
So I would say in the growth and revision on the future is more or less similar to last time, but I think yes, 25 instead of 25 you did 35. That's an indication that you needed more cut. I think by saying that 50 was excessive, I would say that's what the market has read, and the market's kind of a little disappointed that no more, you don't really see much of it after that. But I think maybe we are suddenly so used to getting baby steps, so we feel that 35 was kind of okay. But I think the way the current globe and the local economy is going for, I think we need dramatic deep down. So, but anyway, the next policy is not too much away, it's just 2 months away. I would still expect another, maybe the effective rate going down to maybe below 5% in next 6 months or so.
Traditionally, there had been about 2 quarters lag between the rate cut and its full transmission. So whatever was cut in February has been fully transmitted. Now the banking system is in the process of transmitting the next 25 basis points, which were cut in I think the month of June. So I think normally the time taken by banking system to pass on, because the dependence of banking system on public deposits, mostly at fixed rate, is to the extent of 90% of their balance sheet. So I think it takes time, because banks do not borrow to lend in the market. I mean, when I say they don't borrow other than public deposits to that extent. So if 90% part of the balance sheet is public deposits and 10% takes care of the remaining, their equity as well as the borrowing part, interbank borrowing part, there lies the real challenge, And I'm very sure that in coming couple of months, you would see the transmission of more than probably 50 basis points or so very shortly.